This is The Open. I'm John Ehrlichman. We frequently report on activist investors who influence change at big companies. And in Canada, few have been as influential as Peter Letko, who co-founded Montreal-based Letko Brosseau, which today oversees roughly $17 billion worth of investments. Now, he recently announced plans to transition into an advisory role, but he remains a champion for minority shareholders and for investing in Canada. And he joins us from Montreal. Peter, thanks very much for your time this morning.
Good morning, John. Thank you very much for inviting me.
I guess technically you're stepping back from active day-to-day money management, but I have to start by asking you about this very interesting investment climate right now and what your observations have been.
Well, it's been a very interesting past year or two coming out of the pandemic, of course, and I think a lot of investors have been confused. There's been this huge debate, recession, no recession, and what people have missed is the tremendous strength in nominal GDP growth. If you go back to the second quarter last year, in Canada we were up 14%, in the U.S. 10%. These are extraordinary gains, and people were focused much more on real growth, which is often what's the headline in the business section. And the thing is that real growth in the U.S., for instance, in that second quarter was basically flat. So 10-11% nominal growth, but only basically flat real growth. Now the issue here is how do you go from that 10% down to zero real growth? And the confusing thing has been the calculation of inflation, and a big part of that has been shelter, housing, which accounts for about 40-odd%. So a very complicated series of calculations, and what people have missed is that the nominal growth has been chugging along. And I just want to remind you that when we speak of nominal growth, that's what flows through Walmart's cash registers. And so we've been through a period that has continued to show very nice growth. It's clearly slowing, and there may be clearly as things slow, there may be a risk of slipping into recession. But by and large, we've had a wonderful economy, and the stock market's been helping us along.
So even with this looming risk for Canada's economy and obviously our exposure to the housing market, as a longtime investor in the story that is Canada, do you still feel optimistic about investing in Canada going forward?
Well, I do. In fact, it seems to me, particularly in the context of what has been happening in Europe, that Ukrainian war, and that Canada is a place that has what people need and want. And if I look at if I look at the infrastructure that we have, an excellent infrastructure, well-educated population, growing. I think we added something like 1 million people to a 40 million base last year. Extraordinary. I can't help but be very optimistic about how Canada is moving along.
Over the course of your career, you've had influence in a lot of different areas of the investing landscape, but certainly in the rise of pension-based investing in this country as well. And we've gotten to a point where obviously some of the Canadian pension funds are so large and so global that it's hard to ignore that influence. You have spent a lot of time, though, coming back to the idea of investing at home. And based on what you're saying right now, I mean, what would be your message to other high-profile investors who have capital to put to work, but might be thinking of putting it to work somewhere else?
Well, first of all, I'm really disappointed when I see our pension industry, which accounts for something like 36% of financial savings in Canada. It's a pool of capital that's ideally suited to make investments in equities, and so much of that is being done outside of Canada. That pension industry has gone from investing about 28% in Canadian stocks in the year 2000 to about 3% at the end of last year. Some pension funds, and I excuse me if I highlight one or two, but I think a poster boy here is Ontario Teachers, the second largest pension fund in the country, and all they have is 0.1% in Canadian companies. Now they do have investments in Canadian bonds and real estate and so on. But Canadian companies, public companies, represent the best of what we have. If you look at what's represented in the public markets here, we have our banks, insurance companies. These are amongst the most highly regarded in the world, and there's nothing of that in some of these pension portfolios. I think we're remiss, and I don't quite understand what the logic is here.
Well, obviously, that's a big topic which will continue to follow. One conversation is around big investors investing in Canada, a long-term theme that, whether true or not, people talk about this idea of the hollowing out, of the Canadian landscape when our companies find, other buyers overseas. Obviously, one of the most high-profile recent stories that your firm had been involved with was Teck Resources, and they had put forward this plan to split the business, which you had shown support for. There was a lot of talk about whether Glencore would step in to acquire that business, and Teck's CEO even this week, speaking to Bloomberg, said that they're looking at different options for their steelmaking coal operations, but that the highest bid won't necessarily be the winning bid. What is your view on that, and this idea of Canadian companies being able to write their own future?
Well, it's disappointing when you look at a company like Teck, which is perhaps one of the most successful mining stories here in Canada, and with wonderful businesses outside of Canada. It's interesting that if you look at your Bloomberg page of holders, and the largest holders on one page are about 30, and there isn't a pension fund in that list. Well, no, I'm sorry. There is one. It's the pension fund of the government of Japan. So just imagine this. Some of the biggest pools of capital are neighbors to Teck. I'm thinking of BC Investment Management. They're just across the straits there. They don't seem to own any shares. It doesn't show a great deal of confidence and enthusiasm for Canadian business.
Before I let you go, as we mentioned, you had announced you'd be taking on this new role, but very quickly we were reminded that we're probably going to see more activity from you, because I think within the time of that announcement, the firm was quite active in a decision tied to IMAX, which had been looking to acquire its outstanding shares in the IMAX China business, which your firm was against. Maybe you can just very quickly walk us through your thinking there.
Well, IMAX shares had been beaten down. I think the parent company was very clever in putting forth an offer, very opportunistic. But for investors like ourselves, we want to see the full recovery take place in China. People going back to watching movies and theaters and so on, and a return of strong results. And that should of course lead to better share price. And it's as simple as that.
Okay.